Happy Friday. When does Anthony wear a t-shirt? Like that's when you know it's a rainy, yucky, disgusting, but kind of humid New Jersey February Friday. February Friday, right? I can't really say that because my lips are chapped. Hold on, let me try again. February Friday. All right, cool. Let's let everyone get in. I see that people are joining. Let's get more people to join. I see 50 are in. I see 75 are in. I see 100 in. I see 200 in. I see 250 in. Obviously lying, but I wish those were the numbers. So let's see what's going on. Hey, Amy. Hey, Amy. I'm very partial to the name Amy. One of my best friends ever, forever and ever. Her name is Amy. Her last name started with an A. My last name starts with a C. So growing up in grade school, when you're sat in alphabetical order, we would pick on each other in every single class. And the person you pick on ends up becoming one of your best friends later in life. I wonder if they ever did a study how best friends are close to each other in alphabetical order because you're placed next to the closest in alphabetical order when you go to school. So conceivably, the people that you would have the best insight into getting to know or the best regularity to spend time with as a child are people whose last names are close to yours in alphabetical order. That's probably a really interesting study. It doesn't exist. I don't think there's one, but it sounds like it makes sense. So that's just me opining out loud. All right, so we got some people in here. Let's get a little bit more. We'll give it another minute. You know, I understand it's Friday, but that doesn't mean the world stops. It doesn't mean like you stop working. So for those that are just, really, really late this morning or plan on watching it later, well, those are the ones that aren't going to make 42,500 overnight like one of our panelists or one of our participants that's in this chat right now. So that's okay. All right, so let's just get to it, right? So we're not going to wait for anybody else. Now, yesterday, markets were going to be how the market reacts to both earnings of Amazon and of Snap. And Amazon, because we were able to identify them earlier in the week, that there's no way their numbers are going to be better than last year's numbers, because last year's numbers were coming out of a pandemic, because 2020 was a pandemic, 2021 was numbers over a pandemic, 2022 are numbers over those numbers. So that being said, when did the pandemic start? March 2020. So that was that quarter, right? Meaning March 2021, that quarter over that quarter was probably going to be fairly, was going to be better, right? Because obviously all of the new customers that came in because of the pandemic were going to show in March 2021 rather than March 20. In March 20, let me catch my breath. In March 2020, the pandemic started. Therefore, the quarter that was reported in March was Q4 of the year prior. So Christmas season, basically. Now that quarter's reported in February, but let's say March for all intents and purposes. So that was the last normal quarter for Amazon before the pandemic started. Then the following year, obviously they gained a lot of customers, right? So the growth from 2020 to 2021 was really, really high. Therefore, the growth from 2021 to 2022, how high is that going to be? It's going to be your residual growth, right? Because all of the growth got pulled forward in 2021. Anyone that could ever have been a part of Amazon got in 2020 and 2021. Therefore, 2022, we knew that those numbers cannot be nearly as good as the numbers prior because we don't have this pandemic anymore. There's no rush to e-commerce like there once was. So in knowing that the numbers were not going to be as good as people believed or as good as the analysts were going to estimate, well, then that allows us to say, okay, well, Amazon might not do so well. On top of that, because we saw Google announce a 20-for-1 stock split, and we know Amazon's been rumored for a stock split forever, the news of a Google stock split gave all of those overly optimistic rumor spreaders of Amazon stock split newfound fuel. So then they ran to the stock. So what we saw was when Google reported, Amazon got the benefit of, look, Google was better than expected. Amazon's going to be better than expected. They're both really big companies. Oh, Google's splitting their stock. Amazon's going to split their stock. They're both really big companies. They're both $2,000, $3,000 a share. That makes a lot of sense. Let's get into Amazon. Okay. Now we identified that before Amazon came down in price. We also identified that Facebook was going to have a similar story, right? Like we knew what the numbers should be versus what people expect them to be. And we believed there was going to be a disappointment, and Facebook had its worst day ever, right? Cool. That being said, because Facebook had its worst day ever, it pulled everything down with it. The whole market was down 500 points. The NASDAQ was down 3.7%. Its worst month since March 2020. So now the calculation changed for Amazon. All of the downside we expected in Amazon was pulled forward. All of the downside actually was shown during the market day yesterday rather than when the earnings were announced, because everyone, after seeing Facebook's report, are like, whoa, we had really high expectations for that stock. We don't have them anymore. We should have never bought it. Let's sell it, because I do not want to be a part of this earnings result. Now that takes on a life of its own, because now when people are selling the stock, they're saying, all right, you know what? I got it so wrong. I cannot have a day like Facebook had. Amazon's like the biggest position I own. If Amazon goes down 20, 25% on me, my portfolio is shot, my fund is shot, everything's shot to hell. Let me just get out of it. And we saw Amazon down, what, like $250 yesterday? It was down a lot. And then you had Snapchat. Now, Snapchat doesn't make any money. They're a really popular app that a lot of people use to send video messages back and forth. One could say TikTok and their astronomical growth, which actually Facebook mentioned 5 times on the conference call. So if Facebook's mentioning you 5 times, you're a good competitor. Well, TikTok does video messages, right? Like I'm not on it, but I see people like do video messages, right? Like I'm not like a dude to do. Sorry. So one could say, well, TikTok's growth is certainly going to kill Snapchat. And then one could say, well, I just heard the Facebook report, and they were talking about how video messaging is the big thing, and they're putting more money into Reels. That's Facebook's video messaging thing. So not only is Snapchat unprofitable when it was one of one, but now it has Facebook attacking it because TikTok is kicking Facebook's butt, and TikTok then theoretically is kicking Snapchat's butt. So if you're unprofitable when you're one of one, how can you possibly be profitable when you're one of 3? And in the middle of a market that's slaughtering any stock that's not profitable, look what just happened to Facebook. In fact, you could make the argument, I said yesterday, Snapchat should be 0. Someone should buy it out. The company's worth nothing. That is the height of pessimism, right? When you say a stock could theoretically be worth 0, can you be more pessimistic? Like, is it possible for a stock to go under 0? No, it's not. You cannot go lower than 0. Therefore, if you are making an argument that a stock should be worth 0, by definition, you are the most pessimistic person. You've already sold it, and you cannot sell it any further. You are out. You are not in that stock. Poof, gone. Okay. Well, I'm a pretty smart person, right? So if I can make that argument, other people can make that argument. And what you saw yesterday was the difference between intelligence and emotional fortitude. Because on that argument that we so coherently could make, one would say, well, we better go short Snapchat. In fact, the emotional fortitude of just kicking Facebook's butt would say, oh man, he's on a hot streak. He's hot. He has a hot hand. Now he's making this argument about Snapchat. I could come out and say, all right, guys, that's it. We're going to keep going. Let's keep going. Let's short Snapchat. Do you know what would happen today if I was that silly? Snapchat's up over 50%. Now, I don't know where it is up now. Yesterday, after they report earnings, it was up 56%. In no world, it's like, so I don't know if any of you ever owned a restaurant or been part of a restaurant or managed a restaurant, but the bartender is the one that they always watch, right? Because the bartender is the one handling the most money. They're handling the cash. So you need to make sure that your bartender is good and that they're honest. So when bartenders are stealing money, the way they do it is they calculate the money, or they do something to calculate the money that they're not putting in the register. And what a bartender or a bad bartender believes is, all right, I lost my count. Oh my God, I lost the count. Let me just be safe and I'll take out less than I know I stole. Because at the end of the night, if the register has more than the restaurant was expecting, they're gonna love me. I did better than they even thought I was gonna do. That's a huge red flag. And every restaurant knows that. Because if that money that comes in from the bartender is anything different than what the receipts say, then the bartender's playing with the money. Now, it does not matter if they hand you more money than your receipts say. That does not mean that they're good. Think about it. How did they give you more money? If you just sit there and say, okay, I have more money, great, this guy's great, well, then you're a do-to-do, because you have to calculate how that even happened. Because if they're just taking the money and ringing everything improperly, you should have the exact number that's on the receipt. In fact, if you're getting more than the receipt, you're stealing from the bartender. The bartender accidentally gave you some of his own money. Well, how can a bartender do that? They'd have to put their hand in their own pocket, take the money and put it in the register. Well, why would a bartender ever put their own hand in their own pocket at their own money? You got to see something. Like it's like when you're a pit boss and you're watching the casino dealers, or when you're a manager and you're watching the bar. You're always going to watch the person that has the money, because if that number comes in like completely askew, then you have a serious problem. Same thing with Snapchat. When you have a stock that's up 56%, that's a problem. That means that just nobody knows what they're doing. That means that the volume is so thin that the people that are trading the stocks are so emotionally bound that that's the money flow we're talking about right now. Think about this: Netflix down what, $200? What was it? Amazon down 250, up 300. Snapchat up 56%. Peloton down 40%. What other companies are? You cannot have companies this large trading like they're biotech companies. Now let's take a step back and ask ourselves, how does that happen? Let's go back to the Socratic method. Socrates, you gotta love Socrates. Who doesn't love Socrates? If you don't know who Socrates is, you better ask somebody. The Socratic method is, let's take a step back and ask ourselves how it actually happens. Let's stop making assumptions. Let's stop making inferences. Let's go to it. How does a wheel move? Okay, the circumference is even. Therefore, as the wheel moves forward, it constantly goes ahead and erases friction, right? Something like that. That's how Socrates would ask how a wheel moves. He would say, okay, my car has wheels. Why isn't it moving? He would say, well, how does a wheel move? Let's go back to the original basis. Let's find out exactly why this is happening. Because if the car doesn't move and the wheels are squares, well, there's your problem, right? So in a market, it goes up because people buy, and it goes down because people sell. All right, let's go further. Who's buying? People with money. Okay, who are the people with money? Well, that's the question we have to deal with right now. Because the problem is, it very much looks like the participants of this market, the ones that are using the money, have very little emotional fortitude, have very little intelligence, have very little anything that would be a requirement for managing big money. Say you have $1 trillion and you put it in the hedge fund of Anthony, the hedge fund of Rhino, right? Rhino. And let's say I say to you, oh my God, this month we did amazing. We're up 30%. You would say, wow, that's really great. This month we're up 70%. You would say, wow, that's really great. If you weren't smart. If you were smart, you would say, wait a second. I enjoy being up 70%. But if I'm up 70%, I can easily be down 70%. What kind of risk are you taking that I'm up 70%? In fact, any large investor, if they were ever told that they were up 70%, would fire their manager. No questions asked. They would say, I'm up 70%. How? How are you so bad at what you do that you have no assessment of risk, whatever, that I'm up 70%? Because, yeah, I'm up 70%, but I could have easily been down 70%, and I don't live the life where I'm losing 70% of my money. You're fired. So if those managers are the ones that are running the money, and those investors are the ones trading the markets, how can we, with any comfort at all, for any rationality or any logic, be a participant in this market on any time frame? You can't. I cannot trust the people running the market. Would you go ahead and go to a restaurant that was ran by 11-year-olds? And that's nothing bad about an 11-year-old, but I wouldn't go to a doctor that's 11-year-old unless it's Doogie Howser, because that boy's smart. And even then, he wasn't 11 years old. It has nothing to do with the person. It has to do with the experience and the application that they're being. I cannot trust a market like this. Amazon down 250 and then up 300. In what world do people not have any understanding of what these people's business is? Amazon is the largest company in the world. Well, the second largest behind Apple. It has probably 100 analysts that pay attention to every little piece of it. You guys are all collecting that wrong. Do you know Facebook has 52 analysts? 42 of them have a buy out. Well, you would think these are the smartest people. These are the analysts. Their only job is to watch that one stock, and they can't even do that right. So how do you trust it? You can't. So how do you invest in it? Well, you have to be able to go ahead and say, I'm going to invest at this price point, knowing all of the noise and all of the volatility that's going to be ahead of me. And I'm going to remove my emotions from the equation, and I'm going to keep a game plan, and I'm going to stay steady as she goes. If you're a long-term investor, if you're looking to build a portfolio, that's how you have to do it right now. You cannot sit there and say, well, I have my calculator, and according to these calculations, I could predict this growth level, because the thing that you're missing is the multiple. Stock has an earnings multiple. The earnings multiple is completely dependent on investor sentiment. If investors are comfortable as a class, that multiple goes higher because they have more comfort in the stock and their predictions and the growth and the reaction. If they have less comfort, that multiple is lower because they have less predictive ability to go ahead and see what the stock might be in the future, which actually is a great opportunity. But it's only an opportunity when you wait for the opportunity to arrive, right? Just because I believe that so in hockey, just like in soccer, any good hockey player and any good soccer player, and I guess football for that matter too, no, you don't throw the ball where the person is. You throw the ball where the person's going to be. So just because we know the ball is being thrown there, well, it does not make any sense if we get there before the ball's there, right? Just because we believe we're smart enough to say, hey, we know the ball's getting thrown there, so I'm going to get there early. No, you know what happens when you get there early? You don't get the ball. Or actually, you do get the ball. You're standing there, and the defenseman's like, you're standing there for what? Oh, there's a ball. I'm going to knock you out right now. And then you get knocked out. So we're smart enough to believe that we know where the ball's going. But that doesn't mean that we act on it now. That's foolish to believe just because I know what's happening means I could go ahead and do something about it now, because between now and then, there's all the volatility, which is equaling the opportunity that's going to come to us. This volatility makes a lot of people lose confidence. This volatility takes a lot of big money out of the market. This volatility turns large investors and large people to say, listen, guys, I don't know what you guys are doing over there, but you're going to sell my stuff right now. You're going to leave it in cash. And when you guys figure out what you're doing, and this is a market that I could actually invest my money in, because big money does not invest to make 20 or 30%. They don't. Big money invests for one reason: return of capital, inflation adjusted. I have $1 trillion. I do not want $1.5 trillion. I worked very hard for that money. That's my money. I worked for it. I just want my $1 trillion back, and I want it to have the same purchasing power that it has today. So if the inflation rate's 5%, I want $1 trillion plus 5% whenever I take it out, so that I know that my $1 trillion was safe. Because if I leave my $1 trillion under my mattress, I'm going to lose money. I'm going to lose that 5% purchasing power. Oh, Mr. Jones, I can make you 50% on this one. No, you can go kick rocks, because anyone that tells you they can make you 50% on their money, on that large of money, is taking a big risk. Well, Anthony, you say you could do 40%. I can and I do, but look at the risk we take. If one thing goes wrong, you've seen it. You've seen an option go down 80% overnight. Do you think someone with $1 trillion wants that? They do. People with $1 trillion do not want to stay up at night wondering if the Fed is going to raise rates and what's that mean to 70% of their money. It doesn't work that way. So in knowing and in observing a market that's this volatile, we then know that the earnings multiple is reflecting a less confident investor. It has to, right? Like, how can you have confidence? Therefore, we know as confidence enters into the market, earnings could stay the same, but because people become more confident, that earnings multiple increases. So if a company is earning $10 and the stock is $20, well, their earnings multiple is 2 to 1. They have a 2 to 1 PE, right? Their earnings is $10, the stock's going at $20, their PE is 2, right? We did that math correctly. And that's because I'm terrified. I don't even know if this company's really going to be around too much longer. I don't know what's going on with the market. So I'm only paying 2 to 1 because I can't see out further than 2 years. Okay. Now things get better. Everyone becomes sane. Emotions die down. People feel comfortable and confident in the market again. All right, I could pay a 3-to-1 because I feel comfortable that I could see 3 years out. Now the stock's trading at a 3 PE. You see how that changed? Now the stock's a $30 stock. It's not a $20 stock. Now, if you recall, or if you observe, nothing changed with their earnings. Now, conceivably, their earnings are going to go up in a confident environment. That's why the people are buying it. But the first thing that happens is the multiple. Therefore, if we know the first thing that happens is the multiple, we can look at a market right now and say, we don't care what the earnings are. I actually don't care what any company's earning right now. I know the bigger problem in this market is that people don't trust it. How could you? Therefore, I can look and pick my spots. When the market comes down a lot, I could say, well, look how much this earnings multiple came down. I believe that this market with this earnings multiple is not reflective of what the market would be trading with a multiple higher in a more confident environment. Therefore, I can buy something here and not really worry if earnings are coming down because the market's already pricing in that fear because the multiple is down. The multiple happens before the earnings. Okay. So, Ann, what you're saying is you don't even really care what earnings are. You don't actually need to know the earnings. No, I don't. Because what I've said, and this is the one thing that is maybe one of the things that you have to learn about the market first and foremost. The market already knows everything. The market is made up of participants who are using their most valuable asset, which is completely dependent on their standard of living, to go ahead and represent and exploit the things that they believe to be the things that they know. Meaning, if there's some really, really smart person that knows that Russia's going to send a nuclear bomb to the US, he's going to go ahead and trade accordingly. His trading is going to signal to someone else, whoa, why was $1 trillion just moved? I don't know what's going on, but I'm going to follow that guy. And that ripples in the market where all of a sudden the nuclear bomb hits the US and people say, oh, that's why the market was coming down. The market knew it. Well, how did the market know it? Because somebody always knows something. We're a world of humans. Humans always know what humans are going to do, even if it's just one human. When they're going, if you know you have a certainty, right? Like, you know that if you buy this thing today at $1, you know without a doubt, no matter what, guaranteed, God came down and said it's going to be $2 tomorrow. What do? Do you go ahead and just take $100 out of your bank account and do it? No. Do you empty your bank account? Yeah. But is that enough? Do you call your mother and say, Ma, listen, I can't tell you what's going on, but just give me all your money. I promise I won't let you down. Do you call your grandmother? Do you call your high school girlfriend? Do you call your best friend? Do you call the girl you're trying to impress? Do you call your neighbor? Do you call your coworker? And you tell them, hey, listen, I can't tell you, but I'll give you twice the money tomorrow. Just trust me. Just trust me. Now, when you call them, do they call someone else? Do they say, listen, I trust this guy. I don't know what he's up to, but like, just give me your money. You'll get it back tomorrow. The point being, even if one person knows something, if they know it to believe that they believe it to be a fact, that moves markets. Therefore, the market always knows everything. In fact, it's a very comfortable rule of thumb to understand that the market knows 6 months ahead. If you could understand that, you're good. Therefore, every price today is already telling you what they believe the outcome is going to be 6 months from now. So every news that comes out today has already been priced in 6 months ago. That's the thing. And the stock prices 6 months from now are not going to be based on anything that happened these 6 months. They're going to be based on what they believe to be happening 6 months from then. Therefore, if you take a look at a headline and you follow anything and you say, okay, Amazon did this, therefore I'm going to buy this, you're cuckoo for Cocoa Puffs. Nothing Amazon did matters at all. The reaction to what Amazon did matters a lot, because the reaction tells you what the behavior and the sentiment is of the market. And that is something that you can use to go ahead and move your pieces along the way for going forward. So when we see a move like Amazon and we see a move like Snapchat, and it's a move up instead of a move down, when in the beginning, this was all moves down, right? Like Netflix torpedoed, like Netflix died, Peloton died. What else died? Google did good. Microsoft died and then came back to life. JP Morgan died. You got a lot of debts. Now, Facebook, dead. Like, look, on Facebook, right? Dead. In fact, I think it's still down today. Now you have a stock that's up, and you have two that we identified, and both were on CNBC. Breaking news: Amazon and Snap. And I don't say it anymore, but those that have been a part of this since day one, I used to say something. This program is also being viewed by other people that I have known through my past that I do know have connections to certain people. That's not to say that I move markets, but anyone that's as accurate as we are, that is sharing things with people, is viewed by people that are in the know, right? So I'm not going to say CNBC knew what we said and posted it. That's silly, but I'm not saying that, if that makes sense to you. Anyway, so what does Amazon and Snapchat tell us? It tells us that there are really, really not many participants left. And it tells us the participants that are left are the doomsdayers. Now, these people are the worst people in the entire world. Have you ever met the person that everything sucks? Every time you talk to them, everything's terrible. No matter what, everything's terrible. And actually, when things are bad, they are like, see, I told you, this sucks, that sucks, everything sucks, I told you. They're always out flapping their mouth. But they're just bad people. They just think everything is half full. They're the people that when good news comes out, they get obliterated because they will sit there till the last second, because those are the people that go to the bar with their friends like losers, drink a beer, talk about how hard their day was and how they were right, but the man took it away from them. How do you know a market is just those people? Well, you see stocks like this, they really got, because no real money manager thinks that that Amazon was going to go to like 2,500. I said I could very easily see it going there. Am I a real money manager? No, I don't manage trillions of dollars. And did I even put a bet on it? Did I buy a put on it? No. I said I'm not touching that. I think it could, but what do I know, right? No real money manager thinks Snapchat's actually going to go to zero. They know that between 25 and zero is 25 numbers. They do not say a company that's worth 50 billion is going to 0 billion. I say it's because I'm not a real money manager. I didn't put a position on it. I'm allowed to share my opinion in an unfiltered way because I'm not actually managing anyone's money. I can share just how I'm sharing because I'm also an asset to you. Oh man, I heard Anthony really talking smack about Snap today. Anthony's pretty smart. He says the stock should be worth zero. Well, a smart person would say, well, I could use Anthony as a tool. He's representative of how pessimistic people are at a very high level. If the smartest people think this thing is worth zero, well, then I firmly believe everyone that sold it is out, which means any news they come out with short of we're bankrupt is going to be good news. Therefore, I can buy Snap calls right now because Anthony's so pessimistic. In fact, we have people in this group that use an Anthony wants to throw his computer out window indicator. Because there are times that I've been so wrong that I sat here and I'm like, guys, I want to take my computer and throw it out a window. And do you know we have people in this group that then bought the stock that day because they're like, okay, Anthony's been wrong for that long. And he's really smart. If he's been wrong that long that he wants to throw the computer out the window, he just wants to sell it, we are at a bottom. Because I don't know how many, I feel confident that if he's that beat up, anyone else as beat up as him is already out, meaning Anthony's the last one in, which means if he's out, done. How many times have we seen that work? How many times have you seen a stock do this? It's actually happened every time. So use me as an indicator, right? If you do everything I say, well, then you're not thinking, you're following. If you use me as an indicator and listen and process in your own brain, now you're doing the right thing. Right or wrong, even if you're wrong, you're learning something. That's what this platform is. Let's learn. So what does that mean? Okay, so this morning I was doing a little bit of homework and I've come up with the belief that I think the Dow Jones Industrial Average by the year 2030 is going to be worth 65,000. Breaking news, right? The Dow Jones Industrial Average in 2022 is worth 34,000, which means I believe that over the next 8 years, we're going to gain 31,000 points on the Dow. Now, if you take 31,000 divided by 8, let's call it 32,000 between friends, because that's a divisible number. That equals 4,000 points a year. Now, if I think the market's going to go up on average 4,000 points a year between now and 2030, do I really care what price I buy it at today? Do I really care that the stock's down 10% before it goes up a bazillion percent? No, because I'm an 8-year investor. Now, am I an 8-year investor? No. I have my company, it's Rhino. I invest every second of my day into my stock, into my coin, and as doing so, I put all of my faith in me. I think that the gains that I'm going to show, the performance that I'm going to show, will be better than anything ever in the history of the world. Therefore, I'm not a long-term investor in the stock, because I think any money that I put in the stock market, I'm making less than I could have done if I put it into myself. Right or wrong, that's me. But that's not you. If you are a long-term investor, or you're saying, Anthony, you know what, I have 100 grand or something sitting around that I could just put away somewhere for 10 years and never look at it, what do you think? I think put it in the Dow Jones. Just buy it. You're fine. I can promise you that I'm not going to be so wrong that if I'm believing 4,000 points a year, that it's going to be negative. I would never say guaranteed, but for you to, actually, you know what? For you to go ahead and nail me for lying to you, you'd have to wait 8 years. So I guarantee the market's going to be over 60,000 in 2030. If you want to save that video clip and then sue me 8 years from now, God bless. You're going to have to show damages, though, so you better put all your money into it right now so that you can show that I tricked you. Now, obviously, I'm being facetious and funny. Don't do any of that. But that's how strongly I feel about that. Okay, yeah, so we get it. The backdrop is own the market. What does that have to do with today? Well, if the backdrop is own the market, then how much downside do you see in front of you that possibly could happen before people come in and own the market at those levels? You see, when you understand that the circus is coming to town, there's a floor to how low things can actually go. If you believe that this market is going to get chopped in half, I think you're crazy. But even if the market got chopped in half, if you did not need the money that day and then the market tripled from there, what changed? Was it your feelings? Was it your ego? Was it your pride that you lost half your money? Or was it that you really wish you would have waited so you could have bought at a lower price? All of those things are unique to you, because 5 years from now, you're going to look back and be like, yeah, I could have got a better price, but I did pretty well. That's the way that works. So if we know that to be the case, then we have to ask ourselves, if the consensus is, and I'm not the consensus, I'm just high level, but I believe the consensus among the high level people that have a brain, they know how to manage money. Okay, do I want to put it in government or do I want to put it in private? If I want to put it in private, this is what I'm going to do. I'm going to own the stock market. If that's the case, and I see that government is eroding and confidence is eroding in government, then the confidence in the market's only going to increase. If I see the money flow from Europe and China and everywhere else coming to the US, I know without a doubt that the US market's where I want to be. If I know all of that, what's the level I'm willing to jump in at and risk downside risk, knowing that that downside risk is only going to be of a duration that eventually is going to overturn and I'm going to go higher anyway. What's the number? Well, I don't know it, but everyone knows it to themselves, because this is a question you have to ask yourself. If I was an 8-year investor, my number's right now. I'd buy right now and put it away. In fact, I would probably buy, if I had $100,000, I'd buy 20,000. No, I'd buy 25,000 here. I'd buy 25,000 in a month. I'd buy 25,000 in a month. I'd buy 25,000 in a month, and I'd leave it alone, and I'd go to sleep somewhere, right? Not for 8 years. That's like a coma. We don't want that. But I would go back to my life. Well, what does that mean for people that are looking to trade in and out of things? Well, that means our trading has to be a little different. It means the exhaustion indicator is working really, really well, because if you understand this market and everything I just said, we are really playing with people's emotions. And our indicator actually measures emotions. That's why we're having the best time we've ever had right now. Our indicator is so perfect because the market is perfectly lined up to what we're measuring. we're measuring exhaustion based on emotional, like, oh my God, get me out, or oh my God, let me keep going. And that's who the people of the market are. It's all these do-to-dos that are only playing with emotion. So what does that mean for us? Well, it means we're watching, right? We want to watch how Amazon handles today. We want to watch how Snap handles today. It is our belief that these companies are probably going to open on the highs and they're probably going to close near the lows. Now, that doesn't mean they're going to go negative, but it just means that the people that got into it weren't real money managers. They were like, hey, I'm going to play Amazon earnings. Okay, cool, it popped. Let me sell. I made my money. See you later, Amazon. Because if that's the case, well, it's like the blackjack table, the roulette table in the casino. If the people you're playing with are just taking their shots at wins, well, the house always wins, so they're going to get some losses. Meaning, when they get their losses, what do? They sell and they have no money left, so they're no longer in the market. If the market is only the emotional people, and the emotional people are always going to lose to the house, and the house is always going to win, that means we're going to eventually see a volume that's so low that it's going to represent that there's no one really left in the market, and that's when we come in and we start making our purchases. Now, I'm not saying we're going to wait a month. I'm not even saying we're going to wait a week. We're going to do something before then, because we don't have to get to the, like, things don't all happen at once, right? So there'll be a low, that'll go up, and there'll be a lower low that goes up, and there'll be a lower low that goes up. And we just got to keep identifying those lower lows. And conversely, we have to identify those higher highs, right? Now, the real cool thing that I'm pride goeth before the fall. I'm happy, like I feel good about that in this platform that we've shared, we have not only made money buying calls, we have made money buying puts. So many times you get to be part of a platform where they only know how to make money in one market. Because I can tell you, in 2020, when the market went up every day, how many gurus were there? There were so many people that had pictures and videos of the pretty girls next to the expensive cars on the Abu Dhabi, and they're in helicopters. Follow me, look how much money I'm making, look how much money I'm making, follow me, follow me, follow me, follow me. Where are they now? If you've ever seen the end of the movie Casino, where Sharon Stone is like going from room to room and falls on the floor, dies of drugs, that's what I imagine that they look like. Because they got their faces handed to them. Because they only know how to make money when things go up. And like I always tell my wife, and actually she says it all the time because it's really funny. If you ever take a look at a stock chart, it takes the stairs up and the elevator down. Yeah, things are going really good. Look how cool I am. Look how cool I am. Look how cool I am. Up, I'm dead. And that's the market. That's why we always express such a level of caution. You cannot feel like you're God. You cannot go into this like, ha, look at me. Watch this. No, because you die, right? Like if you go ahead and you win 10 in a row, right? So say you make 100% 10 times in a row. How cool do you feel? I turned $100 into $1 million. I've made 100% 10 times in a row. Watch this. I'm gonna put the $1 million on this one stock. I'm so sure of everything. I'm the best. And that option goes down 80%. What happened? You are now back, if you're lucky, to where you started. You just got annihilated. And what happens when you get annihilated? All right, you know what? Just get me back to where I was. I'm going to put it all in this. I can't lose twice in a row. And you lose again. You are now the coolest man in the world that has zero friends, zero money, zero anything. In fact, you probably want to kill yourself. That's what the market could do to you. So that's what we're going to make sure that doesn't happen to us. So we're always going to be very careful, and we're going to make sure that we understand what it is we're doing. All right. Sorry. All right. So what does that mean to the market today? We're going to take a look. We do know the jobs numbers came out today, and in the infinite wisdom of Wall Street, they were expecting negative 190,000, and the jobs numbers came in at plus 490,000. In December, they revised the plus 199 to 524,000. And you know what really bothers me? For people like you and I, can you imagine ever being wrong by 300% what your life would look like, what your job would look like? I'm just wrong by, I don't know. I'm expecting minus 200. It comes in at plus 400, plus 500. I'm wrong by 3.5 times, but no problem. I'm an analyst. I hate them. Wall Street is a collection of the most useless people, the most villainous maggots you could ever imagine. Anyway, so let's see what's going on today. We'll take a look at some charts. Like, I don't like buying things on a Friday, first of all, because I don't know what's going to happen on the weekend. And I don't like risking that. So there is a chance that we don't buy anything today. But there's a bigger chance that we're going to be able to set ourselves up to see what we're expecting for next week. Let someone call me again on my phone. Seriously. I hate my life so much. Hold on one second. Sorry about that. It seems like people love calling me. All right, so let's go to, and I really got to remember to shut off my notifications. In fact, I got to just get rid of my number because I don't like when people call me. Oh, I got to reclaim host. So how do I do that? Hold on one second. I got to do this. We're almost there. Oh, I can make myself co-host. How cool is that? You know, it's like I'm just learning Zoom. All right, cool. Alrighty then. And this thing always wants to be in my way. I don't know why, but okay. And by the way, I'm sorry if I ever sound like I'm crazy. I do, in full disclosure, tell you that I think I'm crazy. So if you are turned off by it, I'm sorry. All right, cool. Whoa, the market's down 220. Nasdaq's up less than 1%. S&P's down. Russell's down. Russell's down only 0.02. The VIX is up. What happened? I thought Amazon was everything. Woo! You know, we should probably look at the bonds. Wow. So this 10-year yield is 1.92%, which is telling you that they're going to raise rates. Rates are going higher. Now, here's the thing that you really have to worry about. Now we're talking more macro. After 2007, no country was able to issue debt, but they all needed to do debt because no one believed in their currency because you had the financial crisis, blah, blah, blah. So what each country did was they issued debt pegged to the dollar. They were only able to issue debt if people believed that the money they were getting back were dollars so that they knew that the currency wasn't going to be inflated away, which is really good because then the US went ahead and lowered rates to 0%. Therefore, the dollar was a very, very cheap thing for any country to borrow in. So all countries borrowed. Here's the problem with China. They issued so much debt in dollars. Now, when you have a situation where the dollar is rising, the debt level for these countries becomes more expensive because they have to pay back in dollars. And how do they pay back in dollars? They use their own currency. Well, currencies, what's the word I'm looking for? They convert to each other. So the dollar goes up because this currency goes down, right? The dollar only goes up against the currency. So if the euro goes up, well, the dollar goes down relative to the euro, right? Because they compete against each other. Therefore, if a dollar is going up and you owe money in dollars, you're doing it with a currency that's going down because your currency is going down to make the dollar go up, which means not only do you have less money, but that less money you have to use to pay back more money, which is the problem for emerging markets and is a problem for the entire globe with the dollar moving up. So a lot of people are pointing that out as, oh my God, this is the event that's going to blow up the world. I don't think it really blows up the world. I think the US banks are smart. I think they know this. I think US companies have $1 billion, right? So if the dollar is the thing that goes up and US companies have billions of dollars on their balance sheet, well, then why wouldn't you buy a US company? And that's kind of the story of why there's so much money flowed to the US, which is why you should be buying US stocks. Okay, so anyway, so let's go to our charts today. What's going on? So let's take a look at the QQ. Actually, let's take a look at Amazon first, right? That's more important. Ooh-wee. So now if we take a look at Amazon yesterday, you will see a green bar, right? You see that screen? What do we always say? It's green because it's a trend change bar. Well, did it change trend today? I think so. So our green bar is still working. It got as high as 31.41. It got as low as 3,012. Let's take a look at a 5-minute bar. So it started on its highs, right? And then people sold it off immediately. So you can see it with your own eyes. These are the people that bought earnings. They sold it. Now you have people coming in saying, well, those earnings were pretty good. And it's staying fairly stagnant. What happens at the end of the day will be important. We think it probably heads lower, but that's just us. We don't know that to be sure. Snapchat. Let's see. Trend change bar, right? And actually 2 trend change bars. So this changes the trend up. This likely changes the trend back down. And what would you know? It got as high as 37.95. It's now 35. I bet you if we pull a 5-minute chart, we'll see the same exact thing. Up, started at the highs, came down, and now it's sitting stagnant, right? Because nobody knows what to do. They're like, it went up and now it went down. Okay, cool. Let's go take a look at the QQQ, right? Because this has kind of been ground zero for the market. Okay. So what did we see yesterday? We saw the market going down. And like we said, we believed that we were going to see the volume go up, but we didn't want to put that in, but it did, right? Let's go pull out our volatility, see what's going on there. Okay. And our volatility went up as well. And now it looks like it's kind of trying to level off, but it is still going up. So we can't say that it's going, is it up on the day? Hold on a sec. So this is a daily. Oh, it is up on the day. That's a problem. You cannot have, well, not that you can't, but you do not want to see a market up and the volatility up at the same point. So, okay, there's a problem. So let's see something. So if you have the Q's going down and you have, oh, your mother. And you have the volume going up, and you have the volatility going up. I gotta tell you, that's kind of ugly. Kind of means we're going to take another leg down, in my opinion. So if I believe that the Nasdaq is going to continue to go lower, I'm not going to short it here because I also believe that we're getting to a point where it's like, I think the next swoosh, the next down is going to be close to the last one. So I want to be a buyer of the dip rather than a seller of this market. So I'm not buying anything today. But how did I make that decision? Well, volatility going up, well, the stock market, while the market's going down and volume going up is actually the worst signal you could have. That by definition is get the out, like something bad's about to happen. So we don't know what's going to happen over the weekend. Maybe something bad happens. Maybe the market opens up down 1,000. Maybe the market Monday's that day that the market opened with a crash. Now, of course, you'd want to be short, but I'm not. That's too much risk for me. But if I was going to be short, I would be short Amazon. Oh boy, would I. So if we take a look at Amazon volatility, right? And actually, you're kind of getting my juices going. Do I want to take a short position on Amazon? Because if you look at their earnings, do you know Amazon's net income was 14 billion and 11.5 billion of it was their share in Rivian, which is another company that they own stock in, that they did not sell the stock in. So it's a paper gain. It's not even a real gain. That they missed numbers. They were expected some number. They made less than it. They made 1% less sequentially, but their sales were up 9% year over year. They didn't do good for Amazon. Their quarter was not great. It was good. It was not great. For this reaction, it just means that you had all these emotional people get in the market. In fact, I almost want to say that I want to short this rate. But let's talk about something. Why do I want to say that? Because I'm feeling godlike. I've been doing so well that I could sense in myself when I'm starting to lose grasp of my emotions, where I'm starting to feel omnipotent. Watch this, Amazon, I'll short you right here. And I believe it's going to go down because I said so, because everything I said has happened so far. that I'm willing to go ahead and compromise my standards and say, well, this doesn't actually meet what I'm looking for, but it's close enough. That's when you lose money. And I hear it to myself. So I know I would lose. I know that if I did this, it'd be a 50-50. Now, maybe for you, that's, go for it, right? That's fine. What did we also say about Qualcomm? That if push came to shove, this would be the stock that we would have owned. That the earnings were good, that they had a show with Jim Cramer last night, that we believe that if you bought them, you would have made money today. They got as high as 182. They got as low yesterday as 177. They closed yesterday at 178. So but it actually opened today at where it closed yesterday. But within the first couple of minutes, you could have made that money, right? Now, here's something interesting. Look at PayPal. PayPal went positive. PayPal's been getting annihilated. Look, 2 trend change bars. At what point do people say, okay, listen, I don't really know what's going on with this market, but I know PayPal is way too low. It's just too low. Look at all the people that sold it. This is PayPal's regular volume. This is the volume of the people that sold it. Can one say, well, this is a good place to buy it? Do I think PayPal's going to zero? No, I think a large bank, it would behoove them to buy a financial tech company because large banks have no representation in financial technology. They don't. They need to buy these companies. In fact, I love Square. Square's my favorite. In fact, we use Square for our corporate account. I love Square. But if I was JP Morgan, would I buy PayPal? I'd buy it today. I would close my eyes and buy it today. You know why? Because JP Morgan borrows money at 0%. JP Morgan probably has like $100 billion on their balance sheet. JP Morgan can do whatever they want. So if I think JP Morgan, they'd be dumb not to, then do I feel uncomfortable buying it here? Do I see that it's actually positive on the day? What's the stock telling you? In a down market, all of a sudden PayPal's now positive. I think one could buy PayPal. Now, if I think the market's going to go down further, am I going to buy PayPal here? No, but I'm going to keep a list of it. I'm taking note that on a down day, PayPal went positive. So this is our super duper list. Now, what's cool is I found one. I have a 14 red and green. I don't know what this company does. Lucid Group, consumer durables, motor vehicles. I think they're electric cars, actually. Let's find out. Is it Lucid Group, I think? Let's see. Lucid Group is American Electric. Okay. So it's an electric car company. I understand 14 red and green is a little early. So I'm not going to do it. But I'm tempted. I think I have a 13 red and green in Caterpillar. I got to tell you, Caterpillar is a pretty good company. I don't know what this is, but I think I got another one. No, I don't. It was a 10 yesterday. It's nothing today. Okay. So I got a 14 and I got a 13. I got a 14 and I got a 13. I got a 14 and I got a 13. I'm take it. But I think things are going to go a little lower. So here's what I'll tell you. I will take a look at this stuff at 3:55 p.m. If the market is like completely getting obliterated and I have the opportunity to buy these low, I will. Because Caterpillar is as good as an American company as you can have. In fact, I think Caterpillar's in the Dow Jones. Dow Jones 30. I think they are. Yeah, they are. They are a trophy asset of this nation. In fact, if I was looking to buy a stock for the next 8 years, I would buy Caterpillar today. I'm really talking myself into buying Caterpillar. No, it's a 13 red and green. We're not doing it. I do not think it's a bad idea if someone else does it, but I'm not doing it. Anyway, that's that. I feel myself talking myself into it. I don't want to do it. And I need to stop talking. All right. So let's see what's going on here. I do have a chat. Would you please look at crypto today? Yeah, of course, Amy. Amy. So Amy not only was my best friend growing up, but like we dated for like a month or two. And I found out very quickly you don't date your best friends, right? It never works out. But at least for like a day, it's like magical. Like, oh my God, I know everything you're doing. You know what I'm thinking. And then it's a problem. But that's a story for another day. Okay, so crypto is looking good. Actually, so what about the crypto? Oh, we got rid. So everything in crypto is up, which means I would not buy any of it because it's all up. That being said, I do have a problem with crypto. I do not believe, actually, so let's do it, right? So Bitcoin, let's compare it to the NASDAQ on the same chart. Let's pull it out on a daily. All right, where is this? All right, let me see what I'm looking at here. All right, so the orange line is the NASDAQ, the black line is Bitcoin. And you can see they kind of trade together. They actually exactly trade together. Like down, up, down, up. This was going, all right, down, up, down, up, down, up. Now, if we were to look at it, what is leading what, right? Like, is there one that leads the other? So this hits a high over here, but this hits a high over here. This hits a low over here, but the NASDAQ hits low the day before. So it's conceivable that the NASDAQ is leading Bitcoin, right? So this hits a high over here, it's a high over there. It's a high over here the day before the NASDAQ. So here's the problem. If we believe that the market's going to take one more swoon lower, we would also believe that Bitcoin is going to take one more swoon lower. And if we believe the participants in the market are those that are the most emotional, well, then we would believe Bitcoin's probably going to get hit again. That being said, you could also make the argument that if people are losing faith in stocks, maybe they run to Bitcoin, but I don't think that's true. I don't know, actually. I know I wouldn't be in Bitcoin. I just don't trust it. Anything that moves, that crazily, I'm just not interested in. But we could go through them, see if anything jumps out at us. Actually, you know what? I bet you if we did it on a weekly, we'd get different results. Ooh. All right, so we're starting to see something kind of sexy. On a weekly basis, Bitcoin is 12 red and green. Now, you just saw us talking about a 13 red and green and 14 red and green. That we don't jump into. So we wait for like a 16 red and green. That's on a daily basis, though. If you're at 12 red and green on a weekly basis, this is a nice little fountain. You know what? So honestly, if you have the stomach to withstand a down move in Bitcoin, I would own it. Let's see if we have any better ones. Ethereum is 10 red, no green. That's Bitcoin again. Ooh. Look at this one. This one got to 17 red and green at 125 and went to 165. That's pretty good. Solana is 11 red and green. So, let me put these in our super duper list. What is Reef? It's a 12 red and green though, so we'll put it in our list. That might be like the new one. It looks like it's a penny. Yeah, Tange, check that out because honestly, if you want to throw a couple bucks in that at a penny, maybe it goes to 2 pennies, right? I'm saying that to my wife because she's not going to sue me for recommendations. It's our money, we share it. For anyone that just listened to that, I would take a look at it, right? If it's a penny, these Bitcoin things move very quickly. Could this go from 1 penny to 2? I don't know. But it's a 12 red and green, it catches my attention. $11 red and green. 11 red and green. 10 red and green. And I'll put in the chat these in order. All right, let's go into the chat. This is to everyone. So on a weekly, Bitcoin, 12 red and green, Reef, same. Come on, if I wanted to type that, I would, don't you think? How about I just murder you? Okay, so that's as it pertains to Bitcoin. So I'm not opposed to it. And actually, it could be seen as an indicator for the market as a whole, because if these things are flying and they're getting a strong base, I really, really believe we are just one swoon away. So actually, what I would say is if we get one more market pullback, I want to be a buyer. Well, I did say that already, but I'm more motivated now to do that. Oh, this is really getting, I really want to own this. I feel that I'm probably going to own this soon. And this one is now positive again. All right, so the two that we love the most are else. Let me put them in the chat. Probably not joking. Well, so Ron, I was joking about murdering my computer, not somebody. But yeah, point taken. And cat 13 red. Okay, so we'll look back at those. Again, it's always good to make your list. If we miss it, we miss it. That's not the end of the world. But you know what really is? To see Facebook still down is concerning. You would think people would have jumped in by now. So I want to say the key to the market is when Facebook turns, we could feel a little more comfortable. Look at PayPal now, up $1.08. Oh my God, did we call that one? All right, we're gonna let it go because I could obviously sit here all day and do this. I have stuff I gotta do. So I love everyone. Oh, we're gonna keep this going. I decided we're gonna keep it in perpetuity. It's just been really great. There's been such a following, such new membership to Rhino based on this program that it's allowed us to even think further outside the box. And we're going to share with you, but I'll see everyone Monday. Love you. Bye, guys. Excellent news. Oh, and I did the interview with Don yesterday. We'll share with everyone. Once Don completes his editing, we'll share with everyone. All right, guys. Have a great weekend. Bye. Oh, I'm still on. How funny. Love you guys.